Hey everybody, what's going on? I'm thinking, I should start calling this Rick Uncensored, Rick Unscripted in the backyard because I'm liking these backyard sessions, a little more casual. And the weather's nice. The fires have cleared, so things are good here in Southern California. But I wanted to get on today to talk a little bit about a certain investing mindset I've been coming across a lot in investor conversations. Actually, been talking to some of you and a lot of other people, and it's this stock market mindset I keep coming across, and I get it because I've had it. I still have it. I have money in the market, and it always scares the bejesus out of me. But the stock market mindset is it's a short-term thinking. It's a short-term mindset. Anything can happen at the drop of a hat. I saw today that President Trump has COVID, so, of course the market dropped 400 points. And then, in the last half a year or so, we've seen some really precipitous drops, like 2,000 points. I can remember, and then 1,600 points here or there. So it's true. In terms of how you're feeling right now about investing, when it comes to the stock market, things aren't very stable, and they could drop overnight, and that's not a good feeling. But it's just totally different when you're thinking about multifamily. I don't know if many of you have been paying attention, but in terms of multifamily investment, occupancy rates have remained pretty stable, very stable, better in some cases. Over the last 3 months, they've been 90% plus. And I think after the stimulus stopped, they ticked down a bit, but still holding very strong. And that makes sense because if you look back to the last recession, I have, of course, because I'm interested in this stuff, the default rate on mortgages for multifamily was 0.04%. So that means 99.6% of mortgages were just fine during that period. And if you can think back to 2008, during the subprime scandal, all those single family homes, everybody was, getting pulled from their homes. It was horrible. And to think that multifamily was at 96.6% is incredible. And it should tell you that it's a very resilient asset class to invest in. That's what it tells me, and that's why I always feel pretty safe, very safe, as long as I analyze the underwriting, which we can talk about in a second, and I see that those numbers are solid, then there's really nothing to worry about. Even at this time, when things feel very uncertain, everybody's talking about how the next year and a half, it's going to be a challenge for the economy. And actually today I saw that the unemployment rate fell to 8%, or a hair under 8%, which historically is horrible, but compared to the 15% that it was several months ago, things are trending in the right direction. But getting back to multifamily, and if you're considering investing in an apartment, and you have this mindset, this stock market mindset, like, okay, I'm going to wait it out. I'm going to sit there and let inflation erode away my money, which happens, unfortunately. If you just let it sit there in the bank, it's not doing something. I'm always thinking, how can I keep moving my money forward? You'll hear, here comes the garbage truck in the back. Perfect timing. But this is live unscripted. What are you going to do? If you have that mindset that things are going to drop quickly, you're probably just you're gonna stay there frightened and not move forward, and that's not a good mindset to have. We always want to be thinking of how we can do better with our investments. And some of you who are involved in real estate and understand real estate probably have read the book Rich Dad, Poor Dad, but one of the main takeaways is instead of this mindset of like, oh, I can't afford that. I just can't afford that. You have to have this mindset like, how can I afford that? What can I do to move the needle forward? So it's the same with investing. You want to keep the velocity money moving forward and churning and getting in good, solid investments, of course. But you need to be active in that sense. So when it comes to multifamily, things that you got to look at are, have they raised enough operating reserves? That's a big one. If they have enough cash reserves, then they have enough to ride out any storm, especially with some long-term debt on the deal. And that's another part of it, the debt structure. But when you go into a deal, there is a certain amount that should be raised in terms of operating income, just the rainy day fund, basically. And also, there's monthly cash reserves that are put away. And I would hope that most operators are doing this, but you'd be surprised. So you have to look at the numbers. You have to ask these questions. Ask me, definitely. When a deal comes, I'll pretty much lay it all out there in front of you why it's a safe investment, or maybe if I'm just showing an example why not investment is safe, I'll point those things out. But multifamily has been challenging this year because they being lenders, the big lenders, Fannie Mae and Freddie Mac, have been requiring interest reserves, principal reserves, and taxes and insurance reserves up to, it started out 12 to 18 months, which was killing any numbers and not allowing any deal to work for a while. That's what happened back right when COVID hit. And now they've brought that back down to about 9 months. So it's getting doable. Otherwise, you see people getting into deals using smaller bank loans, which don't have those interest reserve requirements, because again, those really can just blow up the returns and make a deal not a deal. But yeah, some of these smaller banks offer loans that have a little bit higher interest rate, but they don't have the interest or the reserve requirements. So the deals can't work. And also, people are taking loans with assumable loans, which means you're just literally assuming someone else's debt that they had in place on the deal, and that way you can avoid those reserves as well, and the deals can work. But yeah, I mainly just wanted to speak to this mindset that I keep hearing. I want to wait till after the election. That really that's not going to have much of an effect at all on multifamily. Again, multifamily is a long play, right? It's not, you're not throwing your money into cryptocurrency or something. You're putting your money into something solid that's been analyzed. The numbers, the deals won't move forward if the numbers don't work, because the lender's not going to sign off on it. A property manager won't sign off on it. These are things that you have to be aware of, and you have to take that into consideration. Otherwise, you're just going to be sitting on the sideline. Your money's not going to be doing much of anything. So I like to get my money into deals like this. I like to get cash flow coming back to me. And then I like for with a good solid business plan, you're going to get some upside at the sale as well. So it's a mindset. You got to think long term. This is literally just going to be a little speed bump. If you get in the right deal with the right debt structure, with the right amount of capital reserves, you're going to be just fine. And in 5 years, you're going to be laughing your way to the bank. And in between that time, you'll be getting cash flow. So try to restructure your mind if you're thinking that stock market mindset. It's not the mindset you should have. Stock market's scary. Stuff can happen quickly. And by the time you find out, it's too late. There are days I don't even look at the market. I go, oh, what did the market do today? And I find out it dropped 900 points. And it's crazy. That's a different mindset, and that's sort of gambling, and this is something different. So get in the right deal, and you'll be fine. All right. As I often like to do, I like to show my cat over here. Let's see. Can you guys see that? That's Oscar. Oscar, say hi. I know that cats do well on YouTube, so I like to exploit that any way I can. He's a good old boy. Hope you like that. I hope you got something out of it, and I hope kind of sinks in. Get rid of that stock market mindset when it comes to investing in apartments, okay? All right. Talk to you guys later. See ya.